completion of the general election itself is a stabilizing factor, as it provides Hungary with a new government holding a clear democratic mandate. For international investors, this primarily signals continuity in legislation and regulation rather than uncertainty. As of today, there has been no official communication or policy announcement indicating any intention to suspend, terminate, or fundamentally alter the guest investor program. Importantly, the core objectives of the program, attracting long-term regulated foreign capitals, supporting residential real estate development, creating employment, and stabilizing economic growth, are structural in nature and not tied to short-term political cycles. Based on past regulatory practice in Hungary and across European Union, the program builds around the supervision and EU alignment show a high degree of continuity even after political transition. For these reasons, we currently do not see guest investor program as being in conflict with the priorities of the new administration. Based on regulatory continuity, policy signaling, and the absence of adverse public feedback, the fund-based investments model has largely fulfilled its original objectives. Compared to earlier bond-based structures, the fund model directs foreign capital more efficiently into the real economy, especially residential real estate and regulated financial assets. This model improves transparency, strengthens supervision, and aligns more closely with EU regulatory standards. At the same time, it supports housing supply, urban renewal, and job creation, key economic priorities cited when the legislation was first introduced. From a practical perspective, holders of long-term Hungarian residence permits enjoy a level of convenience comparable to other European residency programs. This includes freedom in choosing housing, opening bank accounts, access to healthcare, and enrolling children in public, private, or international schools. Feedback suggests that once administrative procedures are completed, daily life integration and education pathways tend to be smooth. As with any country, outcomes depend on individual choices and planning. But legally and institutionally, Hungary provides a framework consistent with EU residency standards. The fund focuses on residential properties in central and well-connected districts of Budapest, particularly locations with long-term rental demand and limited new supply. Over the past year, the fund has emphasized disciplined acquisitions, conservative valuation, and operational stability. Performance has aligned with its defensive investment profile, prioritizing consistency and capital protection over the short-term volatility. No regulated investment fund can legally guarantee capital repayment. However, the fund enhances capital security through multiple layers of risk mitigation, including no leverage, asset diversification, conservative asset selection, and subordinated sponsor capital that absorbs losses before investor capital. These mechanisms are designed to significantly reduce downside risk over the investment period. The prime residential areas in Budapest have historically demonstrated resilience and stable rental demand. If investors choose to continue holding after 5 years, returns would primarily derive from ongoing rental income and potential long-term appreciation. While future returns cannot be predicted or guaranteed, the strategy supports balanced, risk-adjusted performance rather than speculative gains. The Hungarian and EU legal system place strong emphasis on legal certainty and the protection of vested rights. Residence permits that are lawfully issued are generally respected for their full validity period. If legislative changes occur, they are typically accompanied by transitional or grandfathering provisions designed to protect existing investors subject to the applicable legal framework.